Hey everyone, and welcome back for another deep dive. Today we are taking a look at some really impressive numbers coming out of India's renewable energy sector. We're going to be focusing on IREDA, that's the Indian Renewable Energy Development Agency Limited, and their really quite remarkable Q3 performance. We've got their official financial reports, we've got their investor presentation, and let me tell you, this is a company that is making some serious waves.
What's really interesting about this is that, IREDA isn't your typical, run-of-the-mill bank. They're really a major driving force in India's push towards green energy, and these latest reports really showcase that.
So let's jump right in, first things first. Revenue. They brought in a truly massive 1,698.45 crores. I mean,
Mhm.
just to give you an idea of the scale we're talking about here, that's enough to build multiple large-scale solar power plants. And their profit before tax, a very healthy euro 538.2 crores. I mean, that kind of financial success really makes you wonder what exciting projects they might have in store next, right?
It really does. And that profitability, it's not just good news for IREDA itself. It really highlights the growing strength of the entire renewable energy sector, especially in a rapidly developing market like India.
Absolutely. Now, here's a figure that really stood out to me when I was going through these reports. Their loan book, it's grown by a massive 36% year on year, reaching a total of 68,960 crores. That is a lot of investment pouring into green energy projects all across India. I'm curious, though, does managing such a rapidly expanding portfolio present any challenges for IREDA?
That's a great question. It definitely requires a very high level of expertise and some very careful planning. But IREDA's track record so far seems to suggest they are well equipped to handle this kind of growth. Keep in mind that they have Navratna status, which basically means they're considered to be a top-tier performing company in India, known for their performance and their stability. And that should give anyone, whether you're an investor or just someone who is interested in this sector, more confidence in their ability to manage this growth effectively.
Okay, that makes sense. And they're not just, throwing money at any project that comes their way, right? I remember seeing something about their non-performing assets or NPAs actually decreasing. That has to be a good sign, yeah.
It absolutely is. It shows that they're being very selective about which projects they choose to fund, and they're very carefully assessing the risks involved. Their gross MPA ratio actually went from 2.90% in December 2023 down to 2.68% in December 2024. So this decreasing trend really demonstrates a strong focus on responsible lending and minimizing risks, which ultimately is good news for everyone who is invested in IREDA's success.
So tell me more about this loan portfolio. It's not just all solar panels, right? I got the impression that it was actually way more diverse than that.
You're absolutely right. They are supporting a really wide range of renewable energy projects, from wind and hydro to some really interesting emerging technologies like green hydrogen and EV charging infrastructure. It's like having a well-balanced investment portfolio, but for the entire future of energy.
Okay, break it down for me. What are some of the key sectors they're involved in? And what kind of figures are we talking about here?
Sure. So solar power, that still holds the biggest chunk of their investment, around 17,787 crores. Wind energy is close behind, at 10,747 crores. Then we have hydropower at 8,462 crores. And then it's great to see that they're branching out into things like bioenergy, green hydrogen, and EV infrastructure. It shows that they're thinking long term and not just chasing the latest trends.
And this diversity is smart, not just because it benefits the environment, but also because it minimizes risk, which is definitely something that you as a potential investor should find attractive. Now, what about their geographic reach? Where are all these projects actually happening?
Their impact is genuinely pan-India. We're talking 23 states
Right.
and 4 union territories. So this shows a real commitment to nationwide renewable energy development, not just focusing on a few key areas. Some of the states with the most significant loan exposure are Maharashtra, Gujarat, Tamil Nadu, Rajasthan, and Karnataka. It's amazing to see how IREDA is quite literally shaping the energy landscape of an entire nation.
Speaking of impressive, their credit ratings are really something. Domestically, they've got an A-stable rating, and internationally, S&P Global Ratings has given them a BBB stable. These ratings must be pretty crucial for their financing, right?
Absolutely. These ratings really demonstrate IREDA's financial strength and stability. They allow IREDA to access very cost-effective long-term borrowing, which is absolutely essential when you're talking about supporting these large-scale, capital-intensive renewable energy projects. We're talking about huge undertakings here that require a lot of upfront investment. And these ratings essentially tell lenders, hey, IREDA is a safe bet.
That's a really clear way to put it. So with all this success, it's easy to think that it's all smooth sailing. But the auditors did highlight a couple of points. that might raise an eyebrow or two. Specifically, the accounting treatment of certain loans and the impact of their subsidiary that's still awaiting operational clearance. Should we be concerned about these?
These are definitely points worth noting, but I don't think they should be interpreted as red flags. Remember, transparency in financial reporting is absolutely crucial, and in this case, it really demonstrates IREDA's commitment to openness. They're not trying to hide anything, in fact. They're being very proactive about addressing these issues. As an investor, that's something you really want to see. A company that's willing to be upfront about these things, even about the potential challenges.
That makes sense. Now let's talk about the range of financial products and services that they offer. They do more than just hand out loans, right?
Oh, absolutely. They have an entire suite of different offerings. So they provide refinancing options, guarantee assistance for bid securities, lines of credit to smaller NBFCs, which are non-banking financial companies, and even loans against future cash flows. So it's really about supporting the entire life cycle of a renewable energy project, from that initial idea all the way to completion.
I'm starting to see why they're considered a real leader in this space. It's not just about the money. It's about having the expertise and the commitment to see these projects through.
Exactly. And this diverse range of offerings really also demonstrates their adaptability and their ability to respond to the evolving needs of the renewable energy sector. As new technologies emerge and as new challenges arise, IREDA is constantly finding new ways to be a valuable partner for developers.
So let's get into the nitty-gritty of their loan portfolio. Can we take a closer look at the specific types of projects they're actually financing?
Definitely. Like I mentioned earlier, they're supporting both traditional and emerging technologies. So on the traditional side, you have solar, wind, and hydro, which still make up a large portion of their portfolio. But they're also branching out into areas like battery storage systems, which are becoming increasingly crucial for grid stability as more and more renewable energy sources come online. And then there's the really exciting world of electric vehicle charging infrastructure, which is becoming increasingly important as India moves towards cleaner transportation options. And of course, let's not forget about green hydrogen production. It's a technology with such immense potential to decarbonize so many different sectors, and IREDA is right there, supporting its development.
It's like they're a crystal ball, predicting and shaping the future of energy.
Well, they're certainly making some pretty strategic bets on what they believe will be crucial for a sustainable future. And I think that's what's so fascinating about IREDA. They're not just about financing, they're about vision and driving positive change in the energy landscape.
So, to help our listeners actually visualize this diverse portfolio, can we break down their outstanding loan portfolio as of December 31st, 2024?
Absolutely. So as of that date, solar projects still hold the largest share, making up about 26% of their total lending. Wind energy comes in second at 15%, followed by hydropower at 12%. Manufacturing related to the renewable energy sector, which is, of course, super important for building a strong domestic supply chain, represents about 6%. Then you have hybrid wind and solar projects, which are gaining traction for their ability to provide more consistent power output, contributing about 3%. And what I find particularly interesting is that they've allocated a significant portion to transmission infrastructure and emerging technologies.
Oh, that's particularly interesting.
Well, it shows that they're really thinking about the bigger picture. It's not just about generating renewable energy. It's about making sure that that energy can be efficiently transported and integrated into the existing grid. And their investment in emerging technologies really demonstrates their commitment to staying ahead of the curve and supporting those innovations that will shape the future of the sector.
It's like they're playing a game of chess, thinking several moves ahead.
Exactly. They're not just reacting to the current market trends. They are actively shaping the future of the renewable energy landscape.
Okay, now that we have a good grasp on their impressive loan portfolio, let's step back for a second and look at the bigger picture. What is the overall outlook for renewable energy financing in India? What are some of the major trends and driving forces shaping this space?
Well, the outlook for India's renewable energy sector is exceptionally positive. And there are several key factors that are contributing to this. First, the government is really heavily backing the transition to cleaner energy sources. They've set a really ambitious target, 500 gigaBU of non-fossil fuel-based energy by 2030. And they're not just talking the talk, they're walking the walk, implementing supportive policies and regulations that are attracting significant investment.
That's a huge target. It sounds like the government is really putting their money where their mouth is. But are they actually making any real progress towards that goal?
They absolutely are. They've already reached an impressive 200 gigaview of non-fossil fuel capacity. And here's the really interesting part. The costs of renewable energy technologies are declining, which is making them even more attractive compared to traditional fossil
This is
fuels.
a perfect storm. In a good way, of course. Government support, technological advancements, and decreasing costs. It's no wonder that this sector is absolutely booming.
Exactly. And remember, this isn't just happening in isolation. Global trends are pushing for a shift towards cleaner energy, and India is really becoming a key player in this transition. It's a really exciting time to be following this sector.
It certainly is. Now, let's zoom back in on IREDA's financial performance. Their Q3 numbers were really impressive. But are they an anomaly? Or has their success been consistent over time?
Well, consistency is key when you're evaluating a financial institution, especially in a sector as dynamic as renewable energy. If you look at IREDA's revenue from operations, it's clear that they've been on a steady growth trajectory. For the 9 months ending December 31st, 2024, they generated 4,838 crores, which is a 35% increase compared to the same period last year.
That's a huge jump. That shows that their success isn't just a flash in the pan, it's sustained growth over time.
Exactly. And it's not just revenue that's growing. Their profitability has also been consistently strong. Their profit before tax for that same 9 month period was 1,474 crores, a very healthy 22% rise year on year. They're clearly doing something right.
This is fantastic news for investors because it shows that they're growing in a sustainable and profitable manner. Okay, before we move on to the next part of our deep dive, let's talk about their asset quality, specifically those non-performing assets, the NPAs. We touched on this briefly before.
Yeah.
Can you give us a little bit more detail on these declining NPAs? What do the numbers actually tell us about how they manage risk?
Sure. So as of December 31st, 2024, their gross NPA ratio was 2.68%. Now, I know that might sound like a bunch of financial jargon, but what it really means is that only a very small percentage of their loans are considered risky or unlikely to be repaid. And this is down from 2.90% in December 2023. What's even more impressive is that they've managed to keep their NPAs under control, even while significantly expanding their loan book. Remember, their gross NPA ratio was 2.36% back in March 2024. So even with more loans being given out, their risk management is clearly on point.
That is impressive. They're not just growing for the sake of growing. They're being very strategic
Yeah.
and careful about where they're putting their money, which is a great sign for their long-term stability and profitability.
All right, I think that's a great place to pause for now. In the next part of our deep dive, we'll explore how IREDA actually goes about getting the funds to finance all these incredible projects.
I'm looking forward to it. It's a fascinating story of how they leverage those strong credit ratings to secure funding from both domestic and international sources. It's a reminder that financial innovation is a key driver of the renewable energy revolution. All right, welcome back to our deep dive into IREDA. Last time we were talking about their impressive Q3 performance, especially that incredible revenue growth and that really diverse loan portfolio they've built. Now, I'm curious about how they actually get the funds to finance all these amazing projects. It's not like they have a giant vault of cash just lying around, all right?
You're absolutely right. Financing these huge renewable energy projects requires a pretty strategic approach to raising capital, and IREDA has been super successful at doing just that. They mainly raise funds through two avenues: domestic and international borrowings.
So they're tapping into both local and global sources of capital. How do they convince lenders to give them these massive loans?
Well, remember those impressive credit ratings we talked about earlier? Those play a huge role. The 8 stable rating domestically and that BBB stable rating from S&P Global Ratings internationally, they basically act as a seal of approval for lenders. It gives them the confidence that IREDA is a safe and reliable borrower, so they're much more likely to offer them favorable terms.
Yeah, but it's like having a stellar credit score, but in the world of finance. It opens doors and gets you better deals.
Exactly. And it creates a sort of virtuous cycle. Strong credit ratings attract favorable lending terms, which allows IREDA to finance more projects, which further solidifies their financial position. It's really a testament to their sound financial management.
Okay, let's break down these borrowings a bit. What's the split between domestic and international sources?
As of December 31st, 2024, IREDA had outstanding borrowings of 57,931 crores. A significant chunk of this, around 85%, comes from domestic sources. The remaining 15% is from foreign borrowings.
So they're pretty heavily reliant on domestic funding, which makes sense given their focus on supporting projects within India. Where do these domestic borrowings primarily come from?
Domestically, they lean heavily on bonds and bank loans. Their outstanding bonds amount to 26,976 crores, while bank loans contribute 21,035 crores. They also use a smaller portion for short-term loans, totaling 0,350 crores. This kind of diversified approach to domestic borrowing allows them to tap into different pools of capital and mitigate risk.
That's smart. It's like not putting all your eggs in one basket. Spreading out those borrowing sources helps them weather any potential market fluctuations. What about the international borrowings? That must come with some currency risk, right?
You're right. Borrowing in foreign currencies always carries the risk of exchange rate fluctuations. But IREDA manages this through a mix of hedged and unhedged loans. Hedged loans, which make up the larger portion at 6,379 crores, use financial instruments to minimize the impact of currency fluctuations. Unhedged loans, totaling 2,191 crores, are a bit riskier, but they can also offer the potential for higher returns.
So they're strategically balancing risk and potential reward with their foreign borrowings. Now let's shift gears a bit and talk about the people behind the numbers, the shareholders. Who are the key players in IREDA's ownership structure, and how do that impact their direction?
Well, as we mentioned earlier, IREDA is majority owned by the government of India, with the President of India holding a 75% stake. This really reflects their mandate to support the country's renewable energy goals. However, it's not solely a government-controlled entity.
Right. There's a public aspect to their ownership as well. Can you remind us about that?
Absolutely. A pretty significant portion of shares, about 21.24%, is held by resident individual investors. This shows a strong level of public trust and confidence in IREDA's mission. And then the remaining shares are spread among institutional investors, including some big international funds, mutual funds, and insurance companies. Some of the notable names on that list are the Vanguard Total International Stock Index Fund, the Vanguard Emerging Markets Stock Index Fund, and the Government Pension Fund Global. Having such a diverse shareholder base brings a lot of different perspectives to the table and helps ensure a good balance of interests.
It's fascinating how IREDA navigates that mix of government mandate and public and institutional investment. So far, we've talked a lot about the what of their financial performance and operations, but what about the how? How does IREDA actually choose which projects to support?
That's a great question. IREDA has a very thorough process for evaluating potential projects. It's not just about throwing money at anything with solar or wind in the name. They consider a lot of factors, including the technical feasibility of the project, its financial viability, the environmental and social impact, its compliance with regulations, and, very importantly, the experience and capabilities of the project developers themselves.
So they're not just looking at the technology itself, they're considering the whole package, the people, the plan, the potential risks, and the potential benefits.
Exactly. It's a very holistic approach that makes sure they're making responsible investments aligned with their mission of promoting sustainable development. They want to make sure the projects they support are not just good for the environment, but also make financial sense and have a positive social impact.
That's really impressive. Speaking of impact, we talked a lot about the financial side of things, but let's zoom out for a second. What are some real-world examples of projects IREDA has financed and the impact those projects have had?
One great example is their work financing solar parks across India. These massive solar power generation facilities are absolutely crucial for meeting India's renewable energy targets. IREDA has been a key player in providing the financial support to develop these projects, which are contributing to India's energy security and reducing its reliance on fossil fuels.
Solar parks like massive fields of sunshine, turning light into clean energy. It's amazing to think that IREDA is helping to make those a reality.
Absolutely. And they're not just focused on solar. They've also financed numerous wind power projects, both on land and offshore, helping to harness India's abundant wind resources.
Wind power has been a major success story in India, and it's exciting to see IREDA playing a role in its continued growth.
And they're not stopping there. They're also venturing into financing projects related to emerging technologies, such as electric vehicle charging infrastructure. As you know, India has ambitious plans to electrify its transportation sector, and IREDA is right there, providing the financial backing to make it happen.
It's like they have their finger on the pulse of what's next in clean energy.
So they're financing these big, impressive projects like solar parks and wind farms, but what about smaller scale initiatives? Are they involved in those as well?
They are. They're also supporting a wide range of smaller scale projects like rooftop solar installations for homes and businesses. They recognize that every little bit counts when it comes to moving towards a cleaner energy future. And they're really committed to empowering individuals and communities to participate in this whole revolution.
That's fantastic. It's like they're creating a movement, not just financing projects. Okay, let's talk about risk management again, a critical aspect of their operations. Lending to any project always has some level of risk, but renewable energy projects, especially those involving newer technologies, can have unique challenges. How does IREDA approach risk management to protect their investments? That's a very important point. IREDA has a really robust risk management framework embedded in their entire lending process. They assess project-specific risks, like technical challenges or potential regulatory changes, and carefully evaluate the capabilities of those project developers.
So it's not just about the project itself, it's also about the people behind it.
Precisely. They want to make sure the developers they partner with have a strong track record, a solid management team, and a realistic plan for managing those potential risks. And it's not just a one-time assessment either. They monitor projects throughout their entire life cycle, keeping a close eye on how things are progressing and making adjustments as needed.
So it's a very proactive approach that helps them stay ahead of potential problems.
Yeah.
Another thing that's becoming increasingly important for any financial institution is their environmental and social impact. How is IREDA addressing that growing demand for sustainable and responsible investments?
That's a crucial aspect of their work. IREDA is very aware of the importance of ESG factors, environmental, social, and governance in their operations. They've gone beyond just checking boxes and actually integrated these considerations into their investment decisions from the ground up.
So it's not just about making money, it's about making a positive impact on the world.
Exactly. They've developed a comprehensive ESG framework that guides their investment decisions, risk assessment, and stakeholder engagement. They've also aligned their operations with the United Nations Sustainable Development Goals, demonstrating their commitment to global sustainability initiatives.
That's huge. It shows they're serious about their role in creating a more sustainable and just world.
Absolutely. And their commitment to ESG principles isn't just about doing the right thing, it's also becoming more and more important for attracting investors. A lot of investors today are looking for opportunities to invest in companies making a positive contribution to society and the environment.
It's a win-win. They're doing good and attracting investors aligned with their values. I know they've been making a special effort to promote gender equality within their own operations and in the projects they finance. Can you tell us more about that?
IREDA recognizes that gender equality is essential for a truly sustainable and just society. They've implemented policies to promote women's representation at all levels within their organization, and they've set targets for women's participation in the projects they finance, encouraging developers to create job opportunities for women in the renewable energy sector.
That's fantastic. It's about creating a more inclusive and equitable workforce both within IREDA and across the whole renewable energy sector.
Exactly. They understand that diversity brings a wealth of perspectives and talents, and that empowering women is crucial for building a more sustainable and just future.
This is such an inspiring story of how a financial institution can be a force for positive change.
I completely agree. IREDA's journey is a testament to the power of aligning financial interests with social and environmental goals. They're showing that it's possible to do good while doing well.
All right, let's shift gears for a moment and talk about the regulatory landscape IREDA operates in. The renewable energy sector in India is governed by a pretty complex web of policies and regulations. How does IREDA navigate this complex environment, and what are some of the key regulations impacting their activities?
Navigating the regulatory landscape is definitely crucial for IREDA's operations. They work closely with policymakers and regulators to make sure the projects they finance comply with all the applicable laws and standards. One of the key pieces of legislation is the Electricity Act of 2003, which provides the legal framework for the generation, transmission, distribution, and trading of electricity in India. This act includes provisions for promoting renewable energy sources and incentivizing investments in the sector.
So this act lays the groundwork for developing renewable energy projects in India. How does IREDA fit into that framework?
IREDA plays a vital role in putting those provisions of the Electricity Act into action by providing the necessary financial support to renewable energy project developers. They work hand in hand with regulators to ensure that the projects they finance comply with all the regulations and standards. It's a really collaborative relationship where they're not just following the rules, but actively engaging with policymakers to ensure that the regulatory environment is favorable for the sector's growth.
So it's a partnership, working together to create a system that benefits both the industry and the environment.
Exactly. Another important regulation is the National Tariff Policy, which sets guidelines for determining electricity tariffs across the country. This policy includes provisions specifically for promoting renewable energy by making sure tariffs are set at levels that encourage investments in clean energy projects.
This policy is crucial because it helps create a favorable market for renewable energy, making it more financially attractive for consumers to actually choose clean power.
Right. IREDA actually uses this policy as a benchmark when they're assessing the financial viability of projects, ensuring that the projects they finance can generate electricity at prices that are competitive with conventional sources.
That's really smart. It ensures that the projects they're backing are not just good for the planet, but also make economic sense in the long run.
Exactly. They're aligning their investments with the policy goals of promoting renewable energy while making sure their lending activities are financially sound.
Now, I understand there was a significant regulatory development that had a major impact on IREDA, the introduction of the Infrastructure Finance Company, IFC status, by the Reserve Bank of India, RBI. Can you tell us more about what this status means and how it has benefited IREDA?
Of course. The IFC status is a special designation granted by the RBI to financial institutions that are primarily engaged in financing infrastructure projects. IREDA was awarded this status in 2024, acknowledging their crucial role in financing renewable energy infrastructure in India.
So it's like they've leveled up in the world of finance?
Yeah. Exactly. And with this status comes access to a wider range of funding sources, like long-term bonds and external commercial borrowings, which are essentially loans from foreign lenders. These benefits translate into much more favorable lending terms, which allows them to offer longer-term loans to those renewable energy project developers. This is super important because it lets them better match the loan terms to the lifespan of those projects, making them more financially viable.
It's a perfect match. The right type of financing for the right type of project. And this IFC status also boosts their credibility with investors, right?
Absolutely. It reinforces their position as a leader in the green financing space, attracting investors who want to support companies making a real difference.
Now let's get back to risk management, always a key concern for investors. Lending for renewable energy projects, especially those with newer technologies, comes with inherent risks. How does IREDA assess and mitigate these risks to protect their investments and ultimately their investors' money?
That's a great question. IREDA has a very robust risk management framework. It's not just about hoping for the best, it's about proactively identifying and mitigating potential risks. They do this by thoroughly assessing each project, looking at things like the technology being used, the financial health of the developer, the regulatory environment, and even there's potential environmental and social impacts.
So they're really looking at the whole picture, not just the financial projections.
Exactly. This comprehensive approach lets them make informed lending decisions, minimize potential losses, and ensure the long-term stability of their portfolio.
It sounds like they're leaving no stone unturned.
They're definitely not, and that's part of what makes them such a reliable and trusted partner in the renewable energy sector. Their commitment to risk management is a key factor in their success.
Okay, before we wrap up this part of our deep dive, let's talk about another crucial aspect of their operations, their commitment to corporate governance. As a government-controlled entity, they face a lot of scrutiny and are held accountable to high standards. How does IREDA ensure that its operations are transparent, ethical, and aligned with the highest standards of corporate governance?
That's a great question. IREDA puts a strong emphasis on corporate governance, recognizing that it's essential for maintaining public trust and ensuring sustainable growth. They've established a comprehensive corporate governance framework that guides their decision-making processes, risk management practices, and stakeholder engagement. This framework is built on principles of transparency, accountability, fairness, and responsibility. They have a clear code of conduct outlining ethical standards for employees and board members. And they have an independent board of directors that provides oversight and guidance to the management team.
It sounds like they've got all the checks and balances in place to ensure they're operating with the highest level of integrity.
They certainly do. They also have a robust internal audit function that independently assesses the effectiveness of their risk management and control systems. They're not afraid to look in the mirror and find areas for improvement. And they have a whistleblower policy encouraging employees to report any unethical or illegal activities without fear of retaliation. This creates a culture of accountability and transparency, which is crucial for any organization, especially one playing such a vital role in shaping the future of energy.
It sounds like they're really walking the walk when it comes to corporate governance. It's not just lip service, it's ingrained in their culture. All right, I think that's a perfect place to pause for now. Next time, we'll take a closer look at IREDA's specific contributions to different parts of the renewable energy market, like solar, wind, and even those exciting new areas like electric mobility and green hydrogen.
I'm looking forward to it. It's a fascinating story of how they're literally powering India's transition to a cleaner, more sustainable